All right, I have 3:01 on my clock, so we will go ahead and get started, and I'm sure we'll have some other folks joining us today. I want to welcome everyone to the Financial Data Exchange's quarterly webinar series, where we explore issues pertaining to consumer permissioned financial data sharing in the broader financial data ecosystem. My name is Tom Carpenter. I serve as the Government Affairs Counsel for the Financial Data Exchange here in Washington, and I will be moderating the discussion in today's panel. Our panel today is entitled Ensuring Consumer Data Sharing Works for Firms of Every Size. As more and more financial services customers are seeking to leverage their own financial data and to better manage their finances and to understand their finances, it's essential that API-based consumer data sharing works for the entire ecosystem. And with that in mind, today we're going to explore especially how smaller firms are leveraging and designing consumer-first experiencing while also addressing some of the challenges and some of the opportunities that are faced by these smaller firms. For today's call, I'm going to do a brief overview of the Financial Data Exchange for those who are unfamiliar. We'll then introduce our panelists, and then we'll have our discussion today, and then we hope to leave a little bit of time at the end for some audience Q&A. Please don't spam me, but you can use my email address, tom@republicconsulting.com. It's on the screen right here. It's tom@republicconsulting.com, all one word. You can send me an email at any point during today's webinar, and that way we'll be able to handle a few questions at the end among our panelists. So let's talk a little bit about what the Financial Data Exchange is, just to give you some context for why we're hosting this call and why we're interested in the way that small firms are able to leverage the organization. The Financial Data Exchange was founded a little over a year ago as a nonprofit organization that includes a broad swath of the financial data industry, including financial institutions, also consumer data aggregators, financial industry associations, consumer groups, FinTechs, and ultimately the permissioned entities that consumers consent to share their data with. This truly represents a broad swath of the ecosystem and a big tent, all with the mission of pushing forward an open source and interoperable API standard so that consumers are able to share their data efficiently and securely without having to share their login credentials. The standard is aptly named the FDX API. And everything about the organization is really focused on promoting adoption of the FDX API. This includes programs and policies as a membership organization, as well as a large swath of working groups, which is where the real work of the organization takes place. The goal also is to put in place a certification program so that the implementation of the FDX API is consistent across the space. And of course, for any that have not yet joined FDX, we offer peer membership opportunities. And so please do take a look to understand a little bit more about what the Financial Data Exchange is all about. FDX also believes that there are really 5 principles that define consumer-first data sharing, and we expect all entities within the ecosystem and members of FDX to abide by and promote. These are control. 1, that consumers should be able to permission their financial data for services or applications. 2, access. That account owners should have access to their data and the ability to determine which financial data parties will also have access to their financial data. A transparency. Individuals using financial services should know how, when, and for what purpose their data is being used. Only data that is required to provide the services should be shared with the organization providing the service. Traceability. All data transfers should be traceable. Consumers should have a complete view of all financial data parties that are involved in the financial data sharing flow. And finally, security. The financial data parties need to ensure the safety and privacy of data during access and transport when that data is at rest. In terms of the implementation of the FDX API so far, Currently, we estimate that the FTX API has been implemented for 8 million consumers. So that's 8 million consumers who have been moved from credential-based screen scraping to tokenized API access. We expect to be at 12 million by the spring. And just to give some context there, it's estimated that between 50 to 80 million consumers have shared their login credentials with use with a FinTech app at some point along the way. So great progress, but still much work to be done. In terms of who the FTX membership is, as I mentioned, it's entities all throughout the industry. This slide shows kind of the breakdown both in size as well as entity type. And I'll just note that number of 42% are small entities. So today we're focused on some of those small entities, both FinTechs as well as small regional community-based financial institutions. And that really is a core aspect of FTX's membership today. In terms of questions, again, this is just a reminder that we will take questions at the end of the webinar. So please do send emails to me, tom@republicconsulting.com, in order to send a question, and we'll see if we can get to it at the end. I want to take some time to introduce our panelists now and get to our main discussion that you all have joined for. First, we have Kevin Hughes, who's the Senior Product Manager for Aggregation Services at Fiserv. Kevin's responsible for managing product development and strategic initiatives related to Fiserv's aggregation product suite. Next, we have John Vanderbenet. John is currently head of sales for Ninth Wave, where he leads a team that help financial institutions of all sizes address challenges and capitalize the opportunities in this permissioned data sharing space. Next, we have Catherine Kurbitz, who's the legislative director for Congressman David Scott of Georgia. Congressman Scott is the co-chair of the House Payments and FinTech Caucus, and he also serves on the FinTech Task Force of the House Financial Services Committee. Catherine oversees Congressman Scott's legislative agenda. And I also want to mention that any views that Catherine expresses today are her own. They represent her perspective on these issues in the U.S. Congress and may not reflect the positions or views of Congressman Scott. And then finally, we have Rob Morgan at the American Bankers Association. Rob leads ABA's innovation efforts with a focus on policy, as well as ensuring banks have the tools to innovate and partner with startups. So panelists, thank you all for joining us today for this discussion. We'll do some direct questions, and then we'll do a few round robin questions. And I'm going to start out with Rob from the American Bankers Association. Rob, ABA represents a broad swath of financial institutions of all shapes and sizes. And we know that a lot of the larger financial institutions are able to offer their own innovative products, solutions, and connections to third parties so that their customers, their consumers, might be able to leverage their own financial data. But what about the small and medium-sized FIs? How are they engaged in consumer permission data sharing today, and what are some of the key issues or challenges that they face?
Thanks, Tom, and really appreciate you hosting this webinar. I think it's a really timely topic and certainly one we're giving a lot of thought to. And in many ways, I think community banks can rely on the work that's been done by FTX and others to help offer their customers these same sort of innovative products and services and help ensure that they have that control over their data that they expect in today's ecosystem. So, as we think about it, I think there are really three main areas or three main components that need to be in place to help ensure that consumers have the ability to share and control their data in a way that's transparent and helps them get a full view into how it's being used. So, FTX, I think, is a really important piece of this and really the first component. We think of that as, these are the rails that the data needs to move on. And so I think the work that's been done in creating the standard is really an important step here. The second really important piece is actually contracting and having to figure out, obviously negotiating how this data moves, when it moves, is important as well. I think the clearinghouse has done really good work in building out model contracts that can help others in industry look at what standards there are out there and think about how those contracts can be implemented. And then I think the last real challenge in this space is how do you actually manage that permissioning? What does that look like from a consumer interface perspective? And how does a consumer actually control, and from a tactical perspective, how do they control their data? So, I think from our perspective, there are two real challenges here. Community banks share the view of the industry and want to give consumers that control over their data. The first is the need to negotiate these contracts, and I think there are nearly 5,000 community banks out there today, which is a lot of negotiating for every aggregator to work with every bank, and there are a number of fintech companies on either side. So we were really excited to see the announcement this morning by the Clearinghouse and a number of their member banks and ours as well about the acquisition or the investment in Akoya. This, I think, will serve as sort of a network in the middle that will help solve the problem of needing many contracts, sort of many-to-many relationships, and act as a network in the middle that can help facilitate that. So I think there's been really good industry progress from that perspective as well. And then I'd say, I think the last real key component here is in actually integrating this. So, as many of you know, community banks typically rely on their core providers as partners in implementing this and a number of other technologies. So, Kevin, really happy for your participation in the call today and your engagement here, because you all are important partners in helping make this happen as well. So, excited for the discussion, and I think this will be enlightening for us, for community banks, and for everyone else on the line.
Great. Thanks, Rob. All right, let's go to John at Ninth Wave. I've enjoyed learning a little bit about Ninth Wave as we prepared for today's webinar. John, tell us a little bit about Ninth Wave, how you all serve small firms in relation to consumer data sharing. And also, I know that Ninth Wave came in to FTX because of its work in the OFX consortium. So maybe if you could offer a little bit of perspective on protocols, how FTX has benefited Ninth Wave kind of in this regard, that'd be helpful.
Yeah, happy to do so. And I'll add my thanks to you, Tom, and to FTX for sponsoring this webinar and allowing us to participate. We're proud members of FTX, and as Rob said, this is a really important and timely discussion. So happy to provide our perspective. So as you said briefly at the open, Ninth Wave enables financial institutions of all sizes to connect their clients' data to a variety of third-party applications, aggregators, and other sort of destinations for data as sort of the consumers really expect and demand. So again, we work with banks of all sizes, everything from sort of large money center banks down to regional banks, savings and loans, credit unions, etc. And I think our perspective is probably longer than maybe most would guess. So Ninth Wave as a brand is about 1.5 years old, but we actually are the software component of a technology consulting company called EEI that's been in this space for many, many years, providing connectivity for a variety of financial institutions into the Intuit suite of products as an example. And so through that work, we were there in the very beginnings of the OFX consortium, and continue today to be heavily involved in that. In fact, our CTO is one of the chairs of the OFX board that is now underneath, I guess, the auspices, you'd say, of the Financial Data Exchange. And I think our perspective is that standards like OFX, like FDX, are critically important, I think, for all participants in the ecosystem. I think standards can act as a leveler in terms of the playing field, and that's important for everybody. I think it's particularly important for smaller institutions that may not have as much of a seat at the table, as many resources as some of their other larger brethren. So I think this is the move towards FDX and as Rob mentioned, the news on Akoya today, I think can be very much of a good thing for all participants involved. I guess I would also say though that standards are a critical element in getting this right, but just getting to a standard is not an end in and of itself. Our banks and financial institutions of all sizes still need to figure out how do they leverage standards how do they plug into the ecosystem? How do they do it repeatedly, cost effectively, securely? Because at the end of the day, it's all about serving that end consumer and making sure that they're able to integrate into that consumer, be it an individual, a business, what have you, into their their desired application stack, whatever that looks like. So again, we think that having sort of had a seat at the table for OFX, really excited about what FDX is doing and has done so far, and excited to participate more broadly in this conversation.
Okay, no, I appreciate that. And I think especially on that last point, I know I've talked to a few of the smaller FIs that are a part of FDX, and I think really being a part of that ecosystem, the ability to kind of do the hard work, kind of to understand how do we integrate this, how do we make this work, and kind of working together with industry partners at the same table, I think has been beneficial to a lot of folks. So really appreciate that. Okay, let's move to Fiserv. Kevin, Fiserv, you guys are one of the largest core banking providers out there. So I'd love for you to just talk a little bit about how Fiserv's addressing consumer permission data sharing and how you guys are working to transition your clients to the FDX API in terms of kind of the products and services and offerings that you offer.
Happy to do that, Tom. Thank you again. So we do play a very unique role in this ecosystem, as we call it. And it's a role that we think offers a significant opportunity for us to expand the coverage of the different tenets as we discussed around data security, the transparency and the consent and those things. On one hand, we are a direct aggregator. So we are obtaining data on behalf of hundreds of clients from thousands and thousands of sources, and we have the infrastructure already in place that supports that. On the other hand, Fiserv, as many of you know, is one of the largest core providers for banks and credit unions, literally with thousands and thousands of those organizations on our platforms. Many of those also are currently our clients. Keeping in mind, these organizations rely on Fiserv for a large part for a lot of the security infrastructure that they need. They look for organizations and look for integrated solutions that help them achieve their objectives. So as John mentioned, he talked about leveling the playing field. And one of the challenges here, I think, is how we make the infrastructure that's being developed scalable across the different components and different size segments of this market. And we feel strongly that we're in a position with our infrastructure that a natural extension of what we do is to, for example, as Rob mentioned, help these banks manage permissions, because we manage permissions today. So what we're working on, and we joined FDX because we believe in the principles. A lot of the things are things that we subscribe to as an organization, and we value the security and we value the relationship with our customers. We like the ideas of transparency and providing the consent. So as we move forward, we're looking at and working with our bank partners internally to leverage our platform in a way that provides let's call it a single point of contact or a single point of access, where we will manage permissions and manage that information on behalf of the banks, and then be able to utilize the standards of the FDX API to communicate that data back out to those who want to acquire it. So that is a process that we are engaged with, that we're working with, and we think that's where we add a lot of value here in this infrastructure.
Yeah, I appreciate that. Thank you. Thank you very much, Kevin. Okay, Catherine, none of this work, the industry can talk about all the great work it's doing on standards, but we all obviously exist kind of in the shadow or in the context of policymakers and regulators who we know are interested in this. Your boss is the co-chair of the FinTechs and Payments Caucus. He also sits on the FinTech Task Force, so you really have kind of a front row seat on a lot of these issues. And so with that perspective, I'm wondering if you could just give us a sense of how Congress is monitoring and engaging on consumer data sharing, and in particular, maybe the opportunities and challenges for some of the small financial institutions, the small FinTechs, the kind of innovative startups, and especially the minority depository institution or MDIs that I know your boss cares a lot about, and that there's been a lot of work done on the committee. So if you could just give us some broad perspective. I probably asked you one too many questions there in a row.
Sure. So I think looking at Congress's approach first, there are a number of major questions that I think Congress is working through at the moment, and probably privacy is the biggest one. So as we are shifting toward a more consumer-initiated data sharing process, that obviously is initiating a shift toward more innovative products and services. But if you expand outside of the financial services sector specifically, there is a broad conversation going on with regard to privacy and what controls a consumer has or should have with regard to their personal information. And I think, we certainly know that data is extremely powerful, and it has both opportunities for broader and faster access, but there are also risks involved. And so putting together a framework of who owns the data, how it's used, how it's protected, all of those major questions is going to be an essential step in this evolution. I think narrowing that scope a little bit more closely to financial services, a lot of some of the other issues that Congress is considering are those of financial inclusion and disparate impact. And so, as we have more efficient data flows and the use of targeted data sets can afford benefits to consumers, like more affordable forms of credit or products that encourage saving or something like that. But at the same time, I think it's important to consider a focus on financial inclusion and making sure that expanded products and services are available to all participants in the marketplace. So kind of balancing those two, I think Congress is focused on striking the right balance between improved product offerings, but also making sure that consumers are adequately protected. I'll answer the second part of your question with regard to the smaller institutions and specifically MDIs, minority depository institutions. I think minority depository institutions and smaller community financial institutions generally are open to the conversation around open banking. As some of the larger banks are consolidating consumer data, they're simultaneously able to invest significantly in new forms of technology. They are able to develop the new products and really innovate around the consumer or the customer. So open banking can be good for small institutions because it allows them to break into, access to that data by requiring the banks to share certain data points at the consumer's discretion. And so to some degree, this also standardizes the data a little bit so that it's more widely usable. But I think comparatively, some of these smaller institutions still face a bit of a disadvantage just in terms of the capital that they're able to invest in new technology and new innovation. And even, the capital, the cost of compliance and the cost of that kind of staff to manage some of these new technologies and security protocols and those type of things can still certainly place them at a comparative disadvantage. And so with all of those things considered, then there still is a risk for some LMI consumers to be left out of the discussion.
Got it.
That's kind of long-winded, but
No, that's super helpful. And I really appreciate that perspective. Catherine, you and I have talked about this. I'll do just one follow-up in terms of kind of the engagement with the Hill. So there's a lot of innovation in this space, especially in the fintech arena, but even kind of the small and community regional banks and just the way that they are figuring out innovative ways to partner. And I wonder if you could just, while we've got you, for those who don't spend their time walking the halls of Congress or spending time with legislative aides, can you just give us a little bit of either tips or what kind of some of these different ecosystem participants need to do in terms of educating policymakers, or are there specific things that some of the entities or some of the areas of this ecosystem can better clarify for Congress? I think that'd be helpful. It's just, to me, it seems like in some senses there's a lot of members that are really dialed into this issue, and then there's a lot that maybe aren't. And so I just wonder if you could give your perspective as kind of sitting on the other side of the table as a legislative aide who both has to inform your boss on these issues, but you're also receiving a lot of the folks that are out there doing the work. And so just wonder if you could give us your perspective on that.
Sure. I think a lot of the conversation around open banking and just generally innovation in the financial services space is very sort of forward-looking, which is great in terms of, what will these new technologies allow and what opportunities are being opened up, and that's a wonderful perspective. But I think also it's important to kind of do a retrospective look and think about, what activities would be restricted with a shift to permissive data sharing, in the sense that, as we're thinking about consumer protection and as we're thinking about what rights consumers have to their data, are there activities that we're seeing today that would no longer be permissible? And then what impact would that have, for example, on access to financial services? So I think having both of those viewpoints is really important.
Yeah, that's terrific. Thank you so much for that. I'm going to take a moment here to share again my email address for any questions that may come up. It's tom@republicconsulting.com. Please do send an email as we're talking here, and we'll be able to get to your question at the end of our panel. But moving forward, I want to do maybe some round robin questions, and I promise not to call on any of you directly, but would love to kind of have various points of view for our audience to share on these questions. So to me, what's interesting around a lot of the innovation that has taken place is there's really one core driver for pretty much all entities, whether they're financial institutions or FinTechs or aggregators or the industry groups around or even consumer groups. And the one driver is really the consumer, their demand for some of these innovative products and services, whether they're provided by their financial institution or whether they're provided by a third party. And so with that in mind, I wonder from everybody's kind of different perspectives, what are the consumers really demanding with their data? And how are smaller firms kind of able to meet this consumer demand? So I guess the point of this question really goes to, in such a competitive environment with smaller firms and maybe specifically smaller financial institutions with consumer demand, how are you both helping those smaller financial institutions, and are there any kind of gaps or barriers to prevent them from serving that customer demand?
Yeah, Tom, and this is Rob. Happy to sort of take the first swing at that. And I think Catherine really hit the nail on the head here. Is that consumers are increasingly looking to be able to share their data and to use their financial data in wherever they choose to engage, whether it's at a bank or at other providers. But they still have the same expectation of privacy and security that they get with their bank. And so, I think there's usually that trade-off between the ability to share and move that data with ensuring that it's held to the same standards in terms of security and privacy. And I think the reason we're here today is that technology can provide a lot of the answer to that. And so, I think the reason we've all agreed, moving away from screen scraping is the right way to help ensure that customers and consumers have the ability to move that data, but get the sort of transparency and control they deserve when they choose to. And in terms of how the smaller institutions are actually able to adopt those, I think, again, Kevin, I think the core providers play a really critical role here. And I think the work that industry's done and some of the investments that have been made by larger institutions can benefit really everyone here. And so to a greater extent that the core providers are able to adopt standards like FDX and make those available, and initiatives like Akoya, adopting those really gives smaller institutions the ability to offer the same sort of security, transparency, and control that consumers expect today.
Thanks, Rob. That's a great perspective. Others on that question?
Yeah, Kevin Hughes. I think the other part of it, though, to consider that I think is as important, and this is where the kind of balancing comes in, is that these smaller institutions, independent of their consumers, have a very high stake in the security game with this. And they want to make sure that they're doing everything they can to protect their consumers' data, because ultimately the consumer looks to their institution, whether it be bank or credit union, to be a guardian of that information. So I think as we look towards building infrastructure, part of our challenge is the balance between the access and the infrastructure or the security built around it. And I think that's where, when you talk about some of the smaller organizations on the acquisition side, where some of the challenges are, because they don't necessarily have, let's say, the reputation or the things in front of them, and really need to partner with other organizations. And I think that's where, when we look at our role here, it's the balance in making the connections between the two while providing a platform that provides that layer of security and that level of security that, as many people have mentioned, levels.
Helpful.
It's John here. I agree with all of that. I think when we talk about consumers, it probably, bears some pause to talk about, use cases, right? So what we're seeing is certainly, individuals wanting to consume their data in a variety of fintech apps, personal financial management, and again, to do so reliably, securely, and as Kevin says, making sure you get that balance right. We've also seen a lot of interest from businesses of all sizes that have made significant investments in ERP or cloud accounting or other types of technologies that allow them to run their businesses more efficiently and effectively. And they want to be able to not only consume their data within those applications, but also be able to make decisions based on that data. So therefore underlying sort of the need for consistent, clean, accurate, near real-time or real-time data, but also be able to sort of initiate transactions or various types of tasks within that technology stack, if you will, and be able to, have their bank sort of receive instructions, et cetera. So there's all kinds of, I think, again, standardizing the rails is really going to open up a lot. I think as it relates to, some of the smaller institutions, that's where we sort of talk about there's challenges, no doubt, for banks of all sizes, but there are also incredible opportunities for, nimble and forward-thinking financial institutions to really raise their game and compete with, and it's not necessarily just small banks competing with big banks, but it may be, a bank that historically has done mostly retail that sees an opportunity to leverage their brand position to do more in the commercial space and vice versa. So those are some of the things that we see.
Great. That's a great discussion there. So we've talked a lot about kind of smaller financial institutions, and I think there's a worthy perspective there that a lot of you all bring. But what about the fintech side of the ledger? And I've got in quotes small fintech. I think the truth is a lot of fintech is naturally small. Everybody from the two latest MIT students in their garage up through some of the ones that have really grown leaps and bounds in this space just in a few short years. We talked about the fact that FTX has a significant portion, 42% of its membership, that are some of these small entities. So I'm wondering if any of you have a perspective on how some of the small fintechs have been able to engage in this space to differentiate themselves, especially when it comes to FTX and kind of that connection to some of the smaller financial institutions.
Maybe I'll take that as, I guess we're sort of a fintech. I mean, fintech is interesting. Kevin may relate to this, but having been in the market for 20 something years, I guess I was part of fintech before it was cool or cooler, depending on your perspective. And I think fintech is a pretty broad term. But again, I think, speaking on behalf of, some of the other fintechs on FTX, I think all the benefits that we're talking about in terms of standardization and access to, reliable data, I think benefit them. That they may be similarly constrained in terms of their ability, to build rails directly to the destinations, where they need to get the data. I think that's where, aggregators, particularly for smaller, personal financial management apps, et cetera, have been particularly helpful. But I think, everybody sort of in the space recognizes that, there is a better way to procure data. And that's really what it's about. So I think, again, done correctly, I think it should, have benefits on sort of, I guess I don't want to say both sides of the ledger, because it sounds like it's, one is competitive for the other, but sort of in that ecosystem.
Helpful.
Yeah, I think, I'm sorry, Tom. We see it, what's interesting from our perspective, and I think this builds on something that Catherine said before, is, there's and John certainly knows the space, but there's so many kind of interesting and innovative applications that are coming to market. that really do add a lot of value to a consumer's financial life. And I think that's really what we look at when we look at this ecosystem as a whole. But one of the things we want to make sure is that those innovative things, for example, are available to customers of the large national banks and then the small regional credit union. And that's what we're driving towards is and I know I've used the term leveling the playing field. I know others have used it as well. But when we look at that, that's, part of the goal here is to create a scalable infrastructure that allows access across wherever you bank, wherever your data is housed, but gives you that safe and secure access to a variety of financial applications.
Yeah, super helpful. Thank you, Kevin, for that perspective. So let's talk a little bit. FTX is here hosting this webinar. The purpose, the mission of the organization is to really put forward this interoperable API standard to kind of help move this ecosystem, as we've been calling it, away from a credential-based screen scraping kind of model and into a more tokenized API-based model. And we touched on it a little bit at the beginning, but the idea of kind of having that single standard, or at least having a uniform standard, how does that help kind of your various entities and companies to kind of work in this space? I mean, what's the value of having that standard to your companies?
I think it's consistency in a lot of ways, and as John kind of pointed out, one of the goals here is that a lot of applications want to have or need application or need information in essentially a near real-time or real-time environment, and I think that the consistency of that data structure, for example, really eliminates nuances, if you will, between different applications. So I think as we move towards that adoption, I think that's where the value across the infrastructure will be most apparent.
Yeah, and I think if you look at, again, our perspective, having been involved with financial institutions for a long time, and again, as I said at the top, our involvement with OFX, I mean, I think there's a lot that we can learn, and OFX, if you just look at the numbers, has been incredibly successful over the years. And so, really I think it's more of a continuum as opposed to, one ends and one begins. And so I think a lot of the same benefits that OFX brought, FDX should be able to do the same thing. Obviously, the world's a little bit different in terms of connectivity and technologies have changed and use cases are evolved and more sophisticated. But again, we're sort of repeating the point, but again, with that standardization, comes the ability to take a lot of the kind of the basics off the table and can allow all parties to really innovate and do more, again, on behalf of, that end consumer, be it an individual, be it a business, what have you.
And, one thing I'll add, I think I agree with everything that's been said here, but having that standard allows the smaller banks to engage here in the same way. And I think what's important is the fact that this standard has been industry driven and that it's been such an open process that brings in parties from all sides of the ecosystem. I think when we look across the world and see how sort of open banking has been approached in different areas, I think what's really unique about what's happening here is the fact that it is industry driven, and that lets it be more responsive to how the market's changing. It's not always an easy process bringing disparate parties together. So, commend the work that you're doing at FDX, but it's a really important one. We can pick, if we could pick a year ago and say these fields and this sort of messaging standard is important, that's likely to be outdated really fast. But the sort of collaboration that's happening in industry, I think, is going to ensure we have a really robust standard that's adaptable to the way business is adapting. So I think really exciting to see the development that's happening. And I think from a policy perspective, policymakers are appreciating that. And I know the CFPB's principles that they put out in 2017, I think we're geared towards helping give the market certainty to build these sort of developments. And I think FDX is a testament to the success of that approach.
Yeah, I appreciate you bringing the policymaker angle into this. I mean, obviously we've got those CFPB principles and guidelines. We've got the Treasury Department's FinTech report just a bit ago that talked about kind of the ability or the opportunity for the industry to really step into that. Catherine, I don't know if you have any thoughts on that kind of from the policymaker perspective, just the general view on kind of an industry standard and how kind of that fits into the mix.
Yeah, I mean, I think there's definitely a lot of interest, as you mentioned, at many of the regulators that are exploring kind of how they can both support and kind of keep tabs on the innovation that we are seeing in the financial services sector. I think there are still a lot of significant questions around how we can build an effective framework that determines, who owns the data and how it's used and who has any liability for misuse, and how we protect and define that data and its usage will play a significant role in any standardized approach. And the other thing that I think is important to just keep in mind is as we develop these new and innovative approaches to data and technology, that actually opens up even more data indicators that, years or decades ago didn't even exist. And so as we're thinking about how we build a framework that defines how this data is making sure that it is flexible enough to accommodate future changes and expanses in what types of data are even available is going to be very important as well.
Yeah, super helpful. All right, so I think maybe we've addressed points of this. I'll ask this final question before we get to some audience questions. I think that the inherent starting point is, this is a challenging environment for small entities, whether they be FinTechs or financial institutions, in terms of competing with the larger players. And the adoption curve in terms of adapting to API-based data sharing, I think, has been paralleled with whether it's online banking or mobile banking. And I know I've talked to regulators to say that's really our chief concern, is make sure there's not a gap here between kind of that implementation for the large instead of the small. But maybe to take a positive turn on it, I'm interested in where folks see kind of the opportunities for small entities. In other words, in a very competitive landscape, does a standardized API or the ability to kind of transition, does this change the game a little bit for some of those smaller entities in terms of their ability to be on that level playing field? Kevin, that's a term you've used a little bit, and maybe what are some of those opportunities?
Yeah, in talking with our bank partners internally, it's really interesting because they know that data is being acquired for a variety of different applications, but they really don't have, and I'll tie back to one of the tenets, they don't have any transparency into what that data is being used for and where it's going. And we've talked to our banking partners internally about, if you had this insight into what your customers were doing, does it give you opportunities, and let's say within the framework of open banking, to look at expanded products and services that perhaps are just extensions of things you're doing, or maybe things that you already have that your customers might not be aware of. But it gives them the opportunity to get better insight into their customer behavior, as well as to understand where their data is being shared, and perhaps identifying opportunities from that. We see that as a big value add to kind of again, I know I've used the term several times, as the leveling of the playing field, because it gives them that level of insight that allows them to be competitive with some banking and non-banking partners, organizations that might be out in the infrastructure.
Yeah, and I think I'd agree with a lot of that. As we look across the ecosystem, I think I'm really optimistic about the FinTech future for community banks. While they may not have sort of the budgets to invest in large projects, they're often more attractive partners for small startups, because those startups usually see themselves in those smaller community banks, and the ability to be nimble and responsive is really important there as well. And what I'll say is, I think specifically towards consumer data, there are a lot of opportunities. Community banking has always been, and in many cases will always be, a relationship business. And it used to be that you got to know your customers when they came to the branch and had a conversation with your tellers. Today, a lot of those interactions are moving online and mobile. And so the better insight that these community banks have into their engagement with their customers and their customers' data and financial standing, the better they can tailor those services and be those same relationship businesses that they always have been.
And I can give an example, Tom, if it'd be helpful. But one of the things that we've seen, example, where this is working, I think, for a lot of these institutions is the onset of electronic asset verification for mortgage applications, as an example. And that used to be the within the realm of some of the organizations or specialized who had the ability, and as we said, budgets and everything to build that independence. And what this infrastructure provides is the opportunity for those smaller organizations to be able to offer a service or a customer experience that is comparable to what these larger organizations are offering. And we've seen that with a number of our organizations here internally, be able to offer that really streamlined customer experience that helps these consumers achieve their objectives.
That's helpful. Okay, great. We'll move to, we've got just a few minutes left. We're going to try to end just a bit early, but we have received a few audience questions, and one maybe Kevin tags on to an anecdote you were just offering, but the question came in of, what are some real world examples of how some of these smaller entities are doing? How are they implementing? Are there any discernible trends? Are there some that are way ahead of the game, and then others that maybe aren't as much? Wonder if anybody has any kind of specific anecdotes. You don't have to name names, but specific anecdotes on kind of what you've heard or what you see so far.
From my perspective, and I think the mortgage one is one that we certainly see in practice today. As we know, there are, as examples, there's a lot of peer-to-peer payment things that's going on, and a lot of the that money transfer process that's happening outside of that organization. And we've seen organizations in our infrastructure take that information about those types of transactions to being able to understand who their customers are and who they're interacting with. So I think as they look at kind of the expanded infrastructure, particularly around use cases outside of kind of or let me say that would have traditionally been part of the banking infrastructure. I think as they're seeing those types of things being offered now by independent fintech organizations, the smaller banks and credit unions are able to look at their own offerings and see where they need to perhaps expand or enhance certain things in that business.
Super helpful.
I agree with Kevin's point there. We have lots of conversations around, the ability to understand what are the use cases, what customers are requesting that data, ultimately where is it being consumed, and then being able to use that to sort of flow back into that particular financial institution's strategy as it relates to, products and services offered. Again, to Rob's point, less and less of somebody coming in and sitting down face to face, more and more services being consumed. We've had conversations with organizations that, are interested in sort of banking as a service, right? So can we embed pieces of our value proposition in new and different ways to capture, market share that, maybe is sort of digitally, in other words, outside their traditional sort of regional footprint, or and maybe particularly relevant to smaller organizations if they're particularly good at something, but historically they've been sort of bound by sort of their regional scope or constraints. They may be able to sort of open that channel up, as it were, and take advantage of opportunities nationally where heretofore it's only been local.
Great. Thanks for that. We've got another question, and I think we've touched on this a bit, but maybe John could talk a little bit this. But the question is, what's the intersection right now between FDX and OFX? And any kind of thoughts on, what does the future hold as those standards coexist? Is there migration? Are there other standards that kind of need to be brought under the tent? Kind of how does that work?
Yeah, so I mean, I'm probably one step removed. As I said, our CTO is highly involved. I guess what I would say is, OFX is a very time-tested standard, and I don't believe, and I would say we don't necessarily believe that it's going anywhere. I think it's more of a continuum and an evolution as opposed to, at some point on a date certain basis, OFX is going away. I think one of the advantages of OFX is, again, wide adoption. It's a very a lot of certification and it's a very again widely used standard. I think FDX is the adoption figures that you showed at the top indicate that there is widespread adoption, and so I think the two, as is evidenced by the fact that OFX is underneath the FDX organization, I think the two coexist, and I think there's a lot that the FDX standard experience adoption can learn from the lessons of the success, frankly, of OFX. So I think those two, I think they coincide for a good while.
Okay, any other thoughts on that question? All right, another one that coming in from our audience that we've touched on a bit, but maybe just a broad scope look at, the question is essentially kind of how is FDX thinking about other global standards like what's happened in the EU? I know, Rob, you touched on that a little bit. And I'll just speak from the FDX standpoint. I think there's obviously awareness of the other standards. And, especially when you talk to regulators and policymakers, there's certainly awareness. But I just wonder if, from an entity specific, if anybody has comments on kind of how you think we don't live in a walled world here in the US, we're in a full global economy, and just kind of when you think about those other standards in FDX, if you have any thoughts on that broadly.
Yeah, I mean, I'm happy to weigh in from our perspective. I think, again, I'll highlight the fact that I think it's important that FDX is a collaborative effort between industries. And I think, that lets this be a bit more responsive. It also means that as those industries see the need to facilitate sort of interoperability, that they're able to do that. But I think generally, what is really important with this standard is that it's industry driven and that it's part of that collaborative process. So I think we don't see that being the case everywhere, but I think the unique nature of that means it can work more closely with those other standards as well as the business needs arise.
Great, thank you. All right, final audience question, and then I think we will conclude our webinar. And the question comes in related to kind of either sandbox approaches to implementation and integration. I don't know if anybody has any thoughts on kind of, are they aware of any kind of sandbox approaches, whether regulatory sandboxes or just sandboxes for an entity to come and try to implement without kind of flipping the switch in totality? For any of your organizations, kind of how you think through that approach, or are you aware of examples of that?
I'll speak from the Fiserv perspective, but I mean, keep in mind that the API approach and APIs are in existence outside of the FDX infrastructure. So from our perspective, I mean, if a customer or a prospect wants to come in and do that testing with an API form and the consumption and so forth, that's available for them to do. I think the nuance here is the FDX spec, in the sense of if we're talking about the specific format around that API. I'm not sure if that addresses the spirit of the question, but that's certainly capable from that standpoint.
Yeah, no, that's helpful. And I know, Kevin, in our conversations, you've talked about just the challenges of trying to adapt all these different work streams. And it's not just a flip the switch kind of approach, always. Super helpful. Any kind of closing thoughts from any of our panelists as we've kind of had this discussion? Any final points anyone wants to make?
I appreciate the opportunity here. Thank you.
Absolutely. Well, listen, thank you so much to our panelists for being a part of this webinar and spending your time with us this afternoon. I think it's a really critical and important topic, and I think one that we will likely revisit a couple of times to kind of check in to see how we're doing and make sure that there isn't that gap that folks have warned about in terms of kind of that implementation curve. I think that it's just been a great discussion today. So I really appreciate all of you talking through that. For our audience members, I want to direct you to the financialdataexchange.org, FTX's website. If you're interested in learning more, you can find the FTX member list, FTX FAQs, the spec itself, 4.0, the version 4.0, the FTX white paper that really puts out kind of the mission and goals of the organization, and of course, information about how to join and become a member. But otherwise, we just want to say thank you to all our panelists and to all our audience members, and this will conclude this quarterly webinar, and you can look for our next quarterly webinar sometime later this spring. Thanks for all that have joined.